Hi, welcome to MRCS. This is Chakri. Today, in this video, I'm going to discuss about differences between stop loss and adjustments. Is stop loss better than adjustments, or adjustments is better than stop loss? Okay, now let us go into that. When we take any trade based upon any fundamental analysis, technical analysis, or any other price actions or any other patterns, what is most important is the stop loss, because whenever our trade goes against us, stop loss saves us from losing our capital. And another thing is the adjustments. Whenever the trade is going against us, the adjustments also save us. But what is the differences? What are the advantages and disadvantages of both? Stop loss. What is a stop loss? Stop loss is basically like when, depending upon any chart pattern or any tactical analysis or any price action, if you are assuming an uptrend in any stock, you suppose, for example, you buy at rupees 100 and assuming for the target of rupees 150. That is we are aiming about 50 rupees in our trade. But we have to be very careful about our trade because we are deploying the complete 100 rupees of our capital, and we don't know whether it gives profit or loss. If it gives profits, nothing matters because we are gaining our capital, we are happy. But what if it is going against us? Suppose, for example, if you are buying at rupees 100, but the thing is, it went to 130 and it came to rupees 50. Now, what is the loss? It's 50 rupees. It's almost 50% of our capital. Okay. Now, here comes the stop loss. Suppose we are deploying rupees 100 in a particular trade, and if we don't want to lose the complete 100 rupees, because the rupees 50 can also go to rupees 0. So we can lose our complete capital on that particular trade. Okay, now here comes the stop loss. We can keep the stop loss at rupees 90. That means if we are buying at rupees 100, and if you are not if we are not willing to lose more than 10 rupees in particular trade, then we can keep the stop loss at rupees 90, and whenever the price comes to 90, it automatically triggers and our capital is saved and we lose only 10 rupees on that particular trade. Where can we use our stop loss? Stop loss can be used in stocks like in long term, short term, medium term, intraday, or anything. It can depend upon any technical analysis, the futures, and we can apply it in futures and options also, FNOs also. We can do it in even spreads also, like bull call, bear put, and calendar spreads, and all many others. Based on any technical analysis or any price action, we are going to buy an entry. Of course, this is the postmark. Of course, this is the completed graph. So we are assuming what is the benefits of stop loss. Okay, we are buying at rupees 220 based upon the app or price action. Okay, now we will be buying at 220 and we will be keeping a stop loss at 160 based on this candlestick red color rejection over the downside. So we are safe until 160 rupees 160. That means we are not losing more capital, more deployed capital. So deployed capital is whenever, of course, this is the profitable trade where we'll be squaring off our position at rupees 320. The deployed capital is 5,50,000. The profit is 2,50,000. That is 50% of our deployed capital. Here it is an intraday trade, so we can keep our stop loss. Okay, the next, what are adjustments? Adjustments can be done more easily and frequently on futures and options and more spreads. We can do in stocks as well. That is called as pair trading. That will be the different concept of coming to adjustments. Okay, in stocks, like if you buy any stock, suppose say Reliance at particular price, and if it goes down, we can't do anything. We can't do averaging, but not adjustments. But even if we take that same example in Reliance futures and options, if we are buying any, if we are buying futures and if the stock falls, we can sell call options aggressively depending upon the volatility. Now, what adjustments are mostly used in spreads? This is these are some of the spreads. I've taken only four of them. There are many spreads. Suppose in bull call spread, I will explain one of the spread, how the adjustments can be done. Now, I will show. Now, this is the strategy builder from Sensible. Based upon any technical analysis or price action and whatever it may be, we have taken a bullish view on Nifty, and the spread is the bull call spread. We are buying one call option and we are selling one call option. Okay, if suppose we are buying a bull call spread around Nifty, which is 17,370. Okay, now whenever the price goes up, we make profit. Whenever the price goes down, we make loss. Okay, now what if price goes up? That is the happy thing for us. If price goes down, it is something bad for us. Even though the maximum loss is limited to 7,000, we can even reduce it by doing the adjustments. Okay, I'm not showing that this is the only adjustment we have to do. I'm just sharing the simple example of adjustment. This is not the exact way how to adjust the bull cost spread or anything. Okay, please don't try it. Now, suppose say if Nifty is falling, okay, what we can do is we can sell additional call option. Suppose if Nifty's price is 17,370 and Nifty is falling aggressive, falling badly, and we can sell one more call option. In this way, we can, before the loss was 7,000, now the loss is limited to 3,800 on expiry date. Okay, and by doing this, we can adjust our trade. We can adjust our trade depending upon the price action, how the Nifty is behaving. Okay, we need to know how to adjust the particular spread in a particular, in whatever the situation it might be. Okay, for that we have, one has to be very much skilled in adjustments. Otherwise, see, the other leg has the unlimited loss. When if yeah, if one adjusts when it is falling and does not adjust when it is rising, then he might incur a big loss, and one might blow up his capital if he does without knowing the knowledge of option adjusting. Okay, now, now this is the bull call spread we have discussed. This is straddle, strangle, and covered call. There are many spreads, and we can, each spread has its own adjustments method. It's not like there is no thumb rule. This has to be done only for this spread. One has different way of adjusting the spreads. Now, let us discuss what are the. Let us conclude. Now, let us club advantages and disadvantages of both adjustments as well as stop loss. Now, first look into the stop loss advantages. Stop loss advantages are, one can have the intraday trades. Now it is not available due to the SEBI regulations. Now one can save his capital without losing the complete deployed capital. He can do the multiple trades. Suppose trade one has triggered the stop loss, he can go to the trade two depending upon the system which is following. The margin will be not at all blocked, because if he's doing with the stop loss, one trade triggers the stop loss and he can easily get into the other trade because the margin will be released. Now, what are the disadvantages? Emotion kicks in, because if you are taking any Suppose in a day you are taking 2 to 3 trades, and all the 3 trades stop loss triggers depending upon any factor. It can be global cues, local cues, or it might be anything. Drawdown, it can be anything. Once the stop loss triggers if the stop loss triggers continuously, then your psychology doesn't um, your psychology doesn't support for the next trade to have that confidence. Suppose if you are losing 5 trades continuously, you will be not having 100% confidence on the sixth trade. In that way, you can lose the trust on your system, trust or hope in your system. The drawdown might be very huge because the stop loss is the stop loss can be triggered easily. Like one can have very bad global cues, very good local cues. We don't know the complete picture what is going all over the world. Any small trigger can trigger your stop loss. So you need to be strong when you're keeping the stop loss in your particular trade, because you need to manage the psychology and the capital as well, because drawdown might be huge. If your deployed capital is 1 lakh and if you are losing 25%, that is 25,000 in 5 particular trades, your drawdown, your capital has been reduced to 75,000. Now you should be very strong enough to deploy another 25,000 to make it 1 lakh again. Now, now let us come to adjustments. Advantages. What are the advantages of adjustments? By doing the adjustments, one can have huge profits, because if you take any trade, you might be gaining around 2 to 3%. But if you are doing adjustments, you can gain up to 8 to 10% depending upon the adjustments you are doing. Emotions will be completely reduced, because whenever you are doing adjustments, your screen doesn't go to your position portfolio doesn't go to red color. When it will be always in green color, because you it will be always in green color, and for that you need to be very skillful. The drawdown might be very less, because you are adjusting the trade whenever depending upon how it is how it is performing. Booking loss is very minimal, because anyways you are adjusting every time. For all these advantages, you need to be very skillful in adjusting the options. Without that, this can be your disadvantages as well. So before doing trying to do adjustments, better before doing the adjustments, better have a good knowledge on that. Now coming to disadvantages, you need to be skilled in adjusting, otherwise that can be a very big disadvantages. You need a big capital for that, because for taking a particular trade here, no, I am reducing one adjustment trade. So here, for taking a particular bull call spread, you need 16,000 margin, roughly 20,000 margin. But for adjusting the bull call spread, you need around 91 lakh rupees for adjusting the bull call spread. Now, this is the big disadvantage of adjusting. But until you are making the profits, this is a very good thing actually. Again, it depends upon your trading style, your trading account, your psychology, and all. Your capital, if you're not adjusting it very well, because you can see here, for if you're adjusting when the price goes down, and when if the price goes up, you're selling 2 calls, and if you're not going to adjust this, and if price gaps up more, it the loss you are making will be very huge, because there is an unlimited loss in the upside. Okay, you need to know how to adjust even if it goes against us after adjusting as well. Okay. Yeah, the next disadvantage is margin will be blocked, because here 90, suppose you are taking the monthly expiry trade, and suppose you are taking a bull call spread for monthly expiry, and then now you are taking it in initial month, starting month. Okay, suppose you are taking around 5th or 6th or starting week. Now if the trade goes against us in the third or fourth day after our trade executed, now if you are adjusting that, the 90,000, that is 1 lakh rupees, will be blocked for the complete expiry, because you can't uh, release the money unless you are making profits in that trade. Because if you are not making profits and if you are not releasing it, there is no use of adjusting. The main purpose of adjusting is we have to make money even the trade goes against us. Okay, that is the that is the main theme of adjusting. It's not like only we are saving from loss, we need to make money from that, otherwise the brokerage cost will be very huge than our actual loss. Assuming now, let us take an example in Bank Nifty. This is just an example. Assuming your Bank Nifty will be taking support as 32,400 and 450, and you are taken a bullish view over here. Okay, a bullish view over end of the day, and the next day when Bank you will be assuming that Bank Nifty will be opening somewhere around your price, but it gap downs where your stop loss is very, it already crossed your stop loss and it went very down, but you will be not able to exit the trade because you will be thinking that it might go up from here. But let us take an example before. Here the gap down, see the gap down here, the trade open around completely around the trade taken was 36,500, but it went the low of 34,800, almost nearly to 34,800. Sorry, 34,600. Now you'll be thinking that it can go up from here, and we'll be waiting for that. Instead, you can't exit the trade even if you're losing much money, because you will be thinking that it can go up from here and you will be recovering your loss, but that is not the case. See the stock, the how Bank Nifty fell the later days. So here the main disadvantage is the when gap when bank main disadvantage in stop loss is the next day if the stock or any index gap ups or gap downs, you will be not able to square up your position and instead you blow up your capital like anything. Okay, now here the advantage of here comes the advantage of the adjustments. You will be selling the additional calls. Sorry, I'm not going to tell about the adjustment. I'm saying only the sample, the advantage of adjustments. So if the stock, if you're taking any bullish view and if the stock is falling, you'll be selling another call, and due to time decay, time value, we will be gaining the additional call premium as well, and we'll be reducing our maximum loss in initially in the which is in the bull call spread. So here the adjustment helps us in saving our capital, and also we can also it helps in staying in the trade, because if we keep the stop loss, the our trade execute and we are out of the trade. But in adjustments we can be in the trade and also we can make money out of it if we are capable of adjusting even after adjusting. Okay, you need to be capable of adjusting the trade even after your second adjustment as well. So that is the main advantage of the adjustments. I forgot to add one more point. The thing is, depending upon the global cues or local cues, the movement might be very huge. Like it might be either up move or down move. In that cases, while adjusting, we feel sometimes even adjusting can't help in getting profits, or it might even increase the loss as well. So at that point, when even after adjusting, we are not, if we are not able to achieve the profits, we need to keep the portfolio stop loss. For suppose for deployed capital 3 lakhs, I will keep the stop loss around 4%, which is keep the for the deployed capital of 3 lakhs, keep the stop loss 2 to 3%, which is 4,000 to 5,000 approximately, not showing it accurate. So in that cases, you can keep the portfolio stop loss for some extent and exit all the trades, all the adjustment trades and existing trade, and start fresh. That is the way we can get out of adjusting if you are not able to do. So hope now, depending upon your trading style, if you are a long-term investor or any medium-term swing trader, stop loss helps to some extent. Okay, but if you are trading in futures and options and spreads, you need to know the adjustments because it helps more than the stop loss. I'm not saying that stop loss is bad or adjustments is bad. Both are equal and both are helpful for a trader. But you have to choose what is your trading style and what is your trading method, what is your system, and you need to know which is helpful for you. Okay, it is not the thumb rule that only stop loss savers, only adjustment savers. No, it is not the case. Both have their own advantages and disadvantages. You have to choose on your own. Okay, for some of them stop loss works very well, for some of them adjustments works very well, because for adjustments you need huge capital, also the huge knowledge of adjusting. Whereas in stop loss, for stop loss also you need to have the capital as well, but you can get out of the trade and it goes against you, against the. Hope you like this video. Thank you.